How to consistently beat SPY by 2x return. Would you like to consistently outperform S&P 500 or SPY by at least 2x in this tutorial? We are going to show you a few powerful trading indicators to achieve this. SPY on average has an annualized return of about 9%. This implies you need to invest for the long term and hold your positions through all the ups and downs, throughout all bear cycles and bull cycles. Here we are proposing an alternative approach, which is to catch the SPY bottoms and tops and to build equity positions at the bottoms and remove positions at the tops. Go to MacroTradings.com, Members Area and Trend section. Here you can see many trading approaches and supporting indicators and the recommended strategies. Select Bottom Finder number 1. Then you will find the S&P 500 daily chart and some simple moving average lines, along with the rectangular symbols to identify the SPY bottoms. These bottoms are identified using the breadth data, which measure the percentage of stocks trading above the moving average lines, whether 50-day or 200-day. When the breadth deteriorates to a very low threshold, it normally means the market is close to a major bottom, and a rectangle with letter B inside is printed. For example, it successfully identifies the 2022 cyclical bear market June bottom and October bottom. In the 2020 COVID bear market, it first finds the precursor to the major bottom, represented by a rectangle with small green letter B inside, and then finds the subsequent major bottom. Then it again identifies the 2019 bear market major bottom. For the 2015 and 2016 bear market, it detects the double bottom pattern and finds the first bottom in August 2015 and then the second bottom in January 2016. For the 2011 bear market, it again detects the double bottom pattern, identifying the major bottoms in August and then October. For the 2010 bear market, it finds the major bottom in July. For the 2008 secular bear market, it again detects the double bottom pattern, finding the first bottom cluster around October to September 2008, and then the second bottom in February 2009. For all the major bottoms identified, they present good opportunities to start building up equity positions. And if the positions are held until a major top is detected, at which point profit is taken and positions are sold, then a very nice return greater than the annual average 9% SPY return can be achieved. In another video, we go into details on how to use other indicators to find the major market tops. But a simple rule of thumb is if the SPY price action shows a clear breakdown below the 200-day SMA and fails in its attempt to reclaim it, then it's reasonable to assume that a new bear market has started and it's time to either reduce the long exposure or even to go short. For the more aggressive traders who like to go short during a bear market, even greater return can be achieved than those who just trade long in the bull market. If you are interested in leveraging these powerful indicators to beat the SPY performance consistently, sign up for the premium membership services at MacroTradings.com with a 7-day free trial. Hit the YouTube subscribe button to get more videos about the market and trading. Thanks for watching.